let's also take a fundamental view of the market. And for that, we have Sunil Subramaniam joining with us. Sunil, good afternoon. Thank you so much for giving your time to ET Now. And quite a choppy market at present. And this is the time where we not see the short-term perspective of the market, because now the direction is missing and the triggers are missing. Not that we don't have any triggers. It's the earnings season. We are in the middle of the earnings season. It's a mixed bag. The global front, tariff scenarios, all of it is quite volatile, contingent and uncertain. Now, how to find a proper entry opportunity in the market is a big question at present. What's your take on the texture of the market at present? Because there's a lot of sign of fatigue and mild growth slowdown, which we clearly see at present in the market.
Thanks. I think you did a good summary, Mansi, but let me add a little bit of flavor to it. So where I see is that, see, the market, if you look at the 3-month returns of the indices and the 1-month returns of the indices, it'll tell you the whole picture. Because in 3 months, if I recollect, I think the Nifty was probably just 2.5% up. You know, and you saw the mid cap index at about 7%, small cap at about 10%, right? But you see the 1 month, it's a different story. You have the Nifty and the small cap and the mid cap, all under pressure. So what this is telling you is then you got to look at the flows, which is what has decided this. So what happened is that April, May, June saw a strong buying by both FIIs and DIIs. Of course, DIIs was a huge outnumbering the FIIs. So that's why if you see the mid and small cap indices largely outperformed the large cap index in the 3-month period because of the strong domestic buying, right? But I think what's happened, and this started with the earnings season rolling out last quarter, which is for the Jan, February, March quarter, from April middle onwards as the earnings came out, DII stepped in and domestic mutual funds especially stepped in, and as they got clarity on earnings, they did buying of good mid caps and good small caps, and they looked at them as the growth drivers. Now, bear in mind that there's a huge valuation difference between mid caps and the large cap. Large cap is around 22, 23 P. Mid caps and small caps are at 32, 33 P. So despite the higher valuations, domestic fund managers bought those stocks as the last earnings season flowed through, right? Now, come to this, starting from July, what has happened is 3 things have happened. So first is FIS has suddenly turned. I think they're close to probably 45, 50,000 crores sold just in the month of July, which means almost all the money they brought from April to June, they've sold in this month. So dramatic change in outlook on India from the FII. That's the first factor. Second is DIS, if you see, right, while they have bought in about 50,000 crores this month, right, which means they are actually rupee for rupee matched the FIS selling with their buying. Certain key things step in here, right? This 50,000 crore buying is less than the 65,000 crores which you saw in the previous 2 months. So clearly DII buying has also come down. Why? Because I think domestic mutual funds who had built up their cash balance to about 7.5% of the total AUM used all the cash up April, May, June, and by June end, their cash balance was back to a normative 5 quarter, right? So this month, only the fresh flows of SIP, whatever has come, and a little bit of surplus cash they've been able to deploy. So the why I'm given such a long explanation is that now when you look at it, why did the FIs change their mind? FIs changed their mind because of 3 key reasons, right? One is US continues to be attractive because the rate cut doesn't seem to be on the horizon, so the interest rates are high there. But US growth is also quite decent. There has been thing. Inflation is a concern on which Fed will opine today, but there doesn't seem to be a rate cut in the immediate future. So US with higher yields on from a debt side is an attractive market. Second, China. China, as you saw the IMF data today, they've upped the growth rate for the current year to 4.8%. But China has half the valuations of India at 11 PE. So clearly a lot of allocation has gone to China because of their improvement, the fact that they have come close to a trade deal with US. Discussions are on, but at least their tempers are down. And look, but India, unfortunately, the third thing affecting us is that it's unlikely that a BTA is going to be signed before August 1st. We have only 2 days left. And Mr. Trump indicating 20 to 25, which was yesterday. But right from the beginning of the month, you can see that there was no news flow coming that a deal is close. India's trade delegation went, came back, but there was no development because I think India is taking a very strong stance on certain non-negotiables like agri, dairy, generical modified goods and the like. So it looks like we are not going to yield on that, and so a deal is going to be not that easy to conclude. Now, a US Trade Commission is going to come in the middle of August. So which means that automatically the
Sure.
26% tariff which was put on a pause
Hmm.
will kick. So this 20 to 25 that Trump is saying is nothing new. His 26% was
True.
anyway going to come on track. So
True.
FIs they mind because and China was looking attractive,
Yeah.
US was looking attractive, and India with the BTA slipping out of our hands. Now it looks like only in
Absolutely.
fall. So just
Yes.
to finish off my point, so this selling by the FIS, while the DIS have also put in 50,000 crores, the fact is that they stocked up on mid and small caps. And you look at the earnings, mid and small caps have beaten large caps in terms of the earnings growth. They are a double digit with single digit for large cap,
Yeah.
but they don't justify the 32, 33 PE. So fund manager are booking profits at mid cap and small cap to buy some of the large caps that's there. And where are they going buying? Where there's a sharp correction. IT index year to date is 23% underperforming the
Yes.
Nifty. So there's a
Yeah.
huge correction. So despite all the negative news around IT earnings, it's like it's coming into a value zone. So there's buying there. So
Yes,
essentially
indeed.
what we are seeing.
So it seems like it, since the fact that we are also getting to see some of the earnings that have trickled in, case in point being KPIT Tech. But yes, what all you have been saying is indeed making sense. That seems like there's not much of a deviation, and something of this sort is already in the price. But moving on to the next story then, and on to an ET Now exclusive, wherein the Agriculture Ministry has rather approached the Finance Ministry in a move to rationalize GST for agro-pesticides and farm equipment. My colleague Prakash is here with all the exclusive details. Take it away, Prakash.
Yeah, it's a positive development for the agriculture sector, as GST on various farm products likely to be rationalized in order to bring down the overall input cost. A very significant development coming in. In fact, the process has been initiated. Sources are indicating that the Agriculture Ministry has approached the Finance Ministry on this issue once again. A fresh proposal has been submitted after a wider consultation with the industry. In fact, sources suggest that the GST on pesticides likely to be rationalized in line with fertilizer products that could be brought under lower GST slab from existing 18%. In addition to that, the definition of pesticides may be amended as well based on their uses. A very crucial development coming on to other farm-related products, essentially equipments. Sources are indicating that the GST on equipment such as tractors, pumps, other irrigation items will be rationalized as well in order to bring down overall input costs to support farmers. A very crucial development coming in. In fact, the GOM on rationalization is considering the proposal. However, the final report is yet to be submitted to the GST Council. And of course, the GST Council will take the final call after wider discussion.
Okay, so that's an ET Now exclusive. GST on agri products likely to be rationalized soon. Prakash, thank you for all of those updates. We'll keep an eye on that and help you with all the updates that come our way. Moving ahead.